Hi, this is Zamir with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Saturday, the 18th of May. Starting off with the FTSE 100, which didn't quite make the 8,500 level we were hoping and dreaming of. 84.74, the best so far. Risk of a move down to 83.30.40. That's the best guess at the moment. That was resistance on the way up. I suppose the nightmare is that we have to go back to the floor of the channel, currently at 8,200, but at the moment not really thinking of that particular scenario. As far as the upside is concerned, if we do break through the 8,500 area, then looking for progress probably along the lines of what I'm drawing there to 8,800, that kind of thing. That is a line of resistance from back in March, but at the moment just settling on 8,500. We were looking for that by the end of next month. Hopefully we'll get that a bit sooner. Moving on to the DAX, and here it's been a case of trying to find support, actually ideally above the old resistance, which I think so far the market's done. That peak there at the turn of April towards the 18,600 area, but just below it. And new support at 18,600 plus, which is good news so far. In terms of the progression here, it's the top of that rising trend channel from back in October, and the top of the channel there currently heading for 19,500, which we're hoping for by the end of next month. On the downside, the worst seen as being towards 18,200 in the floor of that channel there, near the 50-day moving average, the blue line there. Moving on to the Dow, which seems to be in quite a decent state at the moment. The big headline here that we managed to close above 40,000, but actually if you look at that rising trend channel from September, the real price here is up to 41,300, and we're looking for that while we're above recent support around 39,300. If we're really lucky, we'll stay above 39,700, and basically the old gap down area that this market had. Moving on to Bitcoin, which reasserted its bullishness last week, breaking that line of resistance there from March, breaking the 50-day moving average as well, 64,300, and above that we're really looking for the best levels of the year, best levels ever in fact, towards 74,000 over, well, basically by the end of this month. On the downside, hoping that if we do remain or do break back below 64,000, we will remain above the 60,000 level. On to gold, and here you can see that great end of the week, not far away now from 24.48, the best levels that we had ever, the record levels, and basically the rebound of late along the floor of that rising trend channel from back in January, the top of the channel there heading for as high as 2,600 by the end of the next month, which would obviously be quite a coup, and looking decent there to do that, especially with the RSI rebound that we've had above neutral 50 just about a week ago. Couldn't resist looking at silver as well, and here you can see why. We've got this. We had this trend channel there from, once again, the end of January, top of the channel there heading for the $34 area. We're looking for that rather obviously while we're above $30, which was the old peak, by the old peak there at around 29.90, and hopefully we'll make a decent and clear progression towards that area. The worst case, I suppose, is that we have to test the floor of that channel there near 28.60, but that not quite at the moment on the map. Moving on to the stocks, and starting off with Avacta, which is basically bumping against that red resistance line there from February. That's around the 44 pence level. The top of that falling wedge there from the end of February at 45 pence. So that's the key area to break. If we can break through that, then it would be back the 50-day moving average just shy of 50 pence. We haven't been above the 50-day line since, well, basically all year, which is quite an achievement. The last time was in December, and then that was the big sell signal, the failure there. On the downside, if we stay below, or the longer we stay below the 45 pence level, the greater the risk of a sub 40 pence dive. At the moment, 39 pence, and that support line projection from the end of February is there. Not the worst scenario that we could have, in fact, because we could break down and head much lower, but at the moment let's go for 39 pence while we remain below the 45 pence area. Next up is Barron Oil, which is a rather prettier picture, a rather slow one though, has to be said. Here we've got what I call a sideways shuffle above a rising 50-day line near the low, so that fits in as being a potential turnaround situation. We closed that gap down that we had back in February around the, call it 0.65 level. And the longer we stay above that 50-day line at 0.62, the greater the chance of a move not only to the 200-day moving average at 0.77, but then up to as high as 0.12 or 0.13, perhaps as soon as the end of next month, if we get the kind of spike that we periodically have in this stock. One of those in February and latterly one in November as well. So really waiting for a spike type move there on Barron Oil. Uptrend line in the RSI window as well, which the shares seem to have seen and are bouncing along, which is also positive, especially given the way that that line is now above the neutral 50 level. Moving on to one of last week's winners, Belluscura, which was even more sweet on the basis that there was no news for the shares. There hasn't been any news from the company since mid-April, and rising on good news tends to be, or falling on bad news or without news, also equally significant. But here we've got the shares above the floor of that gap there from March, around 13.5 pence and the 50-day line. The longer we stay above those two levels, the greater the chance of a move to 28 or 29 pence by the end of next month. Obviously, the next coup for the bulls would be to have an end-of-day close back above the top of that gap from back in March at just under 19 pence. On to BlueJay, which against the odds has recovered and recuperated itself after a horrible bear run that we've had. Friday was nice in the sense that, well, actually both Thursday and Friday was nice. Thursday was nice on the basis that we had a gap close buy signal around the 0.3 level, and Friday delivered on that gap close buy signal with an end-of-day close above the 50-day line around 0.31. The longer we stay above the 50-day line, the greater the chance of a move to 0.4 pence. In this case, we're looking for that by the end of June. Moving on to Bezant, which is reluctantly turning around here. We've got a broadening triangle base, higher low versus the April low there, around 0.17. And the view now is that if we can get a decent end-of-day close above the 50-day line, 0.21, then we're looking for the 200-day moving average at 0.27 as soon as the end of next month, or even sooner. RSI is broken above neutral 50 as well, which is helpful. Staying in the mining area, or the mining and exploration area, we've got Chaarat Gold, which actually had some news at the end of the week. I think that was talking about funding regarding Tulkabash, and here you can see that the situation is that we've nearly hit what would be the logical target there, the 200-day moving average at 5 pence. Looking for that hopefully over the next week or two. That's also the top of that broadening triangle base from back in March. But the key here is to spend as much time as possible either above the October floor at 3.2 pence, or if we're lucky, the 50-day moving average at 3.6 pence. Onto a stock which I have never looked at, I think, which is coming up next, FRP Advisory. And here we've got the shares going into a golden cross, unfilled gap to the upside. The whole of Friday's range above previous resistance at 132. The longer we stay above £1.32, the greater the chance of move to the top of the range, £1.77, perhaps by the end of next month. And probably a week or two away from a golden cross between the 50 and 200-day lines. On to Greatland, where it's just a massive sigh of relief that the shares have actually turned around and gone up and stayed up, perhaps finally responding to the price of gold. Our initial target there hit to the top of that broadening triangle there from the beginning of March, there around 7.4 pence, above the 200-day line, and that target looking for 9 pence by the end of June. And hopefully, the way things are looking, a little bit more than that. It's a bear trap from below the October support there, 5 3/4 pence, and it's worked quite well. Onto a stock which is rather less followed, which is Ingenta, and here we can see that the shares have managed to bounce off the floor of that rising trend channel quite hard, which is good, and looking for the shares to hit up to £2 in the top of that rising trend channel from way back in 2020 as soon as the end of next month. If you're cautious, you might wait for an end-of-day close above the 50-day line, currently at £1.56, as that blocked the shares back in April. But got a bear trap rebound from below the 200-day moving average of £1.46, and that's probably the near-term stop loss for the stock. Another stock which has never, well, hardly ever got any coverage here is Indus Gas, but too much or too good to resist at the moment, in the sense that we've got this W-shaped turnaround, nice U-shaped progression there since the midpoint there was reached, or the initial rally there was reached around 13 pence. The weekly close near that neckline resistance suggests that the more time we spend above 13.5 pence, the greater the chance of a move up to, I suppose, half the big decline that we had back in April. So let's call it the 30 pence area by the end of next month. Ideally, we stay on the right side of 10 pence in the meantime. Moving on to a vertical climber over the week called Potash, and here already going into a golden cross, probably just a week or two away from that. So we had a gap close buy signal probably on Tuesday, and followed through on that, broke the old resistance from last June around 0.72. And the current position is that we're not too far away from our initial target there of 1.25 pence, above 1.25. If you're a fan of the shares, you're looking for 1.9 pence by the end of next month. The tightest stop loss there probably around 0.9, which was the initial 2023 resistance area. MetalNRG has done well of late as well, and here you can see how and why, with the massive unfull gap to the upside, and then pushing through on that. We've also broken the April resistance, so above that at 0.09, looking for a relatively smooth move to 0.12 pence over the next few sessions. In fact, at the moment, that looks like the minimum on the upside. Ideally, we head up to the old September 2022 resistance at 0.16 by the end of next month, but staying above that 0.95 level. On to a requested stock, which is Power Metal, and here you can see that the shares consolidating well above both the 50 and 200-day lines, slightly up at the end of the week, and the longer we stay above that 14 and 14.6 pence area, the greater the chance of a move to 17.3 pence by the end of next month, or even sooner. On to the last two. One is a recent winner, which was called up here, Plant Healthcare, and we've hit our initial target there around 5.3 pence. Above that, looking for 7.5 pence by the end of next month. On full gap to the upside on Thursday, and we follow through well with a rising 50-day moving average as well. Speaking of rising 50-day lines, we've had a bear trap ricochet off the rising 50-day line, Synairgen, and that was at 5.9 pence. Above that, looking for the shares to hit as high as 10.75 pence by the end of next month. The overall pattern here, a bear trap, a gap reversal, or at least a gap reversal, and the shares finding support above that gap there, top of that gap from back in April, 5.4 pence. The longer we stay above that, the better. That's it for me today. More updates during the week.